Good morning, everyone. Let's do the pre-market prep. Gold is already opened. Crude oil is about to open. So on crude oil, I kind of guessed it's going to be an open inside value. So on both, you have an open inside value. Now for gold, we have a pretty good bracket of about 3 days. If you can see this, the values are overlapping. Whenever you get that, after an extended upside that happened beforehand, we are probably looking at the liquidation phase. So we would be expecting a short. Now, having said that, with a massive value area and a responsive activity today, because it's opening inside value, that is not that great. Anytime you have an inside value open, it means that you're expecting responsive activity, boring day, prices pinging up and down. So we'll see what happens. But I mean, I've kind of done the best that I can here. Another factor to consider here is that there is an ADR exhaustion for the day. So the daily range has been exceeded. London went a bit crazy and basically retraced the entire move from the Fed rate yesterday. And so did Asia as well. So because of that, expecting more downside is a little bit low probability. So if we are going to short today, you're going to have to wait for some kind of a rally first. So keep that in mind as I'm kind of going through these hypos. So hypo 1, I said post NY cut long. Those of you who are on the pro dev know what I mean by this. It is my concept of day trading time zones. So I would like to see some kind of a bullish engulfing or some kind of a reversal if I'm going to get involved in this. However, I would prefer to see initial balance do its thing, sort of bounce around, and then to try and probe below value and then to pull it back up. It's not a high probability setup, this, because of the way, the market is, the bracketing and all of that. And so I'm not too happy with it, but because of the London move and overnight Asia taking it down, this would be more probable. And if we are going to have some kind of a rally, I would prefer to be in on it. The second hypo is to have a short after a rally into an overnight swing high. So what does that mean? Well, if we get somewhere at these levels, that's your sort of supplies that were created fairly recently within the last 24 hours. So that would be my next area to look for like a short, like a reaction, reversal, whatever you want to call it. If we get a very wide initial balance, so I mean, it's already pretty wide, The session is just started. Or has it started? Yeah, it has started. And it already has, a very wide initial balance. So it's not out of possibilities that you're just going to have like a short that continues, rejects value, and then continues to go towards this daily Q low, which is a larger time frame swing extreme. So that, that will be my next choice. I don't have a fourth hypo because I don't really see anything that could be obvious. I wouldn't want to go longing initial balance extension to the upside because the value is very wide from this not post NY cut, federal rate decision yesterday. I have a bit of a headache today, so I apologize if I seem a little bit sleepy and stuff. I'm, trying to do my best. But yeah, so no hypo 4 because the hypo 4 would involve me getting involved in an initial balance extension and a sustained auction upside. Wouldn't want to do that. If anything, if I'm going to get involved in a long, this is how I would do it, the hypo 1. So that's my gold outlook for today. Let's have a look at what I wrote for crude oil. By the way, new contract today. Everything is rolling to the May expiry on crude oil. So don't trade the wrong contract. Okay, crude oil, I said we're in a daily demand. There's buying wicks everywhere. previous daily 3 candles. So let's have a look at that. So there they are, wick 1, wick 2, wick 3. That means there's some buyers there, or there were some buyers there. So today, how are we opening the profile? It's open inside. But it looks like, again, the initial balance is just going a little bit crazy because we've just opened. Let's see what that does to our hypos. I also put flimsy 3-day bracket because if you look at it, it's not really a bracket because the market is still ever so slightly kind of edging downwards, but that could be like a slowdown in the down move, which kind of again puts longs back into play. So I said hypothesis 1, 4-hour Q low, which we're in on at the moment. And I said, see what the initial balance does. If initial balance is not too massive, then post and I cut long from yesterday's swing extreme. Well, right now we've already busted that swing extreme, so that hypo is gone. The next one, short after a rally from a London swing extreme. Okay, so that would mean somewhere around here. So we need a very good rally, and to be honest, that's like a rally of 110 points. So preferably I would like to find a trade before that happens. Otherwise I'll miss like the entire day's move. So again, these hypos I wrote like an hour ago, and things are looking very different now that the markets have opened. My third hypo was failed auction short due to responsive activity. That's not really happening either. I'm going to have to redo these. I can see that now. So actually, let's redo these. Good exercise for everyone. So these are scrapped. No, no, no. So hypo 1. If the ADR gets exhausted, then possibly a long from this H4 demand. Hypo 2 is to wait for some kind of a rally to value low and then to see whether the value gets accepted or rejected. So if value accepted, long. If that doesn't happen, then we carry on into reversal at value low. Hypo 4, failed auction short, I mean, maybe. Failed auction short? Let's see what would have to happen. So, if this continues falling, actually, you know what? It doesn't have to be a failed auction short because it can be a sustained auction short. Short post value rejection. This one would need initial balance not to be too wide. So if initial balance not too wide. And those would be my 4 hypos in light of whatever's happened now. So as you can see, depending on what happens in that first kind of half an hour and what happens at the exchange open and how the market moves straight from the open, it can completely change your hypos that you're looking at. So this is why I prefer to do my hypos when the markets have opened, and this is why I don't like trading during initial balance, because the initial balance is there to kind of establish the sentiment for that day. So you have 2 things by which to gauge value sentiment. One is the actual open of the exchange in relation to value, and the second one is what did the price do during initial balance. Is it too wide? Is it short? Is it moving very fast or not so fast? And all of that kind of changes the outlook. So now, like I said, since I saw this whole move, it put the liquidation continuation into play. So that I wouldn't have been able to see that if I didn't wait for the value open. But I would still prefer my hypo 1. So I always put these hypos in order of probability. All right, so let's see what happens. I will check in a bit later.